I just applied for a job. They said I have a bad credit score, but that doesn't make any sense because I don't have a credit card. I haven't taken any loans. He genuinely had no idea that that was a BNPL. And that has been recorded in the bureau as a default. They could have 12, 13, 14 BNPL outstanding.
Lizzie Chapman is the co-founder of Zest Money.
And one of the people who helped build India's BNPL ecosystem.
Have been called the grandmother of BNPL in this country. People would tell me, oh, Indians don't use credit. India is a low trust society.
Right.
And I think it's almost the exact opposite. I have to say something controversial. Banks are not on your side, okay? And this is, again, true all over the world. Banks are like casinos. They always win. Getting into trouble, especially in your early years, can massively detrimentally impact your financial health later in life.
How do you avoid that?
Credit card is one of the easiest and one of the best ways to build your credit score. Is a zero-cost EMI really a zero-cost EMI?
Right.
There are two big ways a zero-cost EMI can hurt you. Number one.
How and why did you get into this space?
So I actually grew up in a relatively normal household where nobody talked about money at all.
In England?
Yeah, in England. I was lucky to be born in London. My parents are like artistic and work in charity and stuff like that. They didn't know anything about money. And I think when you don't have something, you get quite fascinated by it. And at university, I got really obsessed with the topic of money. So I joined a trading club, trading and investment club, where we would trade real money and try and make money. And it turned out I was quite good at that. And I realized it was quite easy. But quite quickly, what I realized, maybe this is my socialist roots coming out, that banks are very much designed to make rich people richer, design great products for companies and the wealthy, but they do an appallingly bad job at serving the normal population, right? I was there for 5 years and I finally left to join a charity, which was actually the richest charity in Europe at that time. They had a lot of money. And they sent me off to India to try and find investment themes, so investments we could make in India. And that was when the penny dropped, because this was kind of 2010. And suddenly everybody in this country was becoming very digital, if you remember. Flipkart, MakeMyTrip, this was the beginnings of digital payments.
People were talking about this thing called UPI.
Literally, it was just taking off. Whereas in Europe, people were still going to the bank, putting physical checks in the bank.
Right.
You know, they still do that, by the way. It took 3 days to move money from one bank to another, blah, blah, blah. And already in India, I could see that things were going to be different. We were going to move in a completely different direction. And that's well known now. There was a leapfrog, as we call it. We never went from, we never put a bank branch on every corner.
Yeah.
We went straight to having finance in your mobile phone, in your pocket. I'm not joking. I actually just made a decision one day. I want to pack up everything, switch my life here. I want to be here and I want to be part of this movement. I truly believe the biggest and most exciting financial technology companies in the world were about to be built in India, and I wanted to be part of that.
And you came to India. So what was your first impression when you saw, the marketplace? Like, how do Indians borrow and spend compared to the UK or, other countries in the West?
Yeah, that's a good question. Actually, it was very exciting because people would tell me, oh, Indians don't use credit. We don't believe in credit. We're a saving economy. This is in our culture. And then I would go to a shop. And I remember actually the local Kirana store, the guy that I used to go and buy my vegetables off, would say, madam, pay me at the end of the month. You don't need to pay every day. You can create a tab, basically. I remember buying an air ticket once to London, and I was quite shocked at the price. And the travel agent said, just pay me in 2 installments, some now, some in a week. And I'm like, this is credit. This is credit. This country works on credit. In fact, we almost have more credit in the system because it's provided implicitly, because the formalized structures are not necessarily there. And
trust.
Trust, it's so funny. There's a lot of people love to say India is a low trust society. And I think it's almost the exact opposite.
Right.
Because the absence of certain structures and rules are there, people create their own trust networks. People are incredibly trusting.
Yeah.
People let, strangers come into their house, carry their diamonds across the country, and it all happens without insurance. It's really hard to not get carried away when you think about how much has happened. Like, what has changed in literally a decade.
Yeah.
I mean, a decade. We've gone from a financial inclusion problem. We had people who were not just underbanked, they were unbanked. Right. Most people in the country did not have access to a safe way to store their money. Today, we are one of the most heavily banked markets in the world. Everybody has a bank account. Most people have access to digital payments. Most people have access now to bite-sized credit products and bite-sized investment products, which is really, really phenomenal. And all of that has been made possible because of something called digital public infrastructure. Right. It's one of the best examples in the world of when the private sector, so startups, banks, fintech, payments companies, worked with the public sector, the government, to create what we now call India Stack, which is a bunch of absolutely incredible scaled advanced technology that can identify, authenticate, and transact on volumes that the world could never have imagined. We know all the data, but UPI today does more transactions every day than the entire Visa global network.
Wow.
That's just phenomenal. We should be extremely proud of the technology we have in finance in this country.
So, we were looking at a lot of data, and according to CRIF's Highmark data, overdue credit card balances have jumped 44% from last year to this year, which is like, 50%. It's like 1.5 times.
Yeah, this is a big concern at the moment across the industry. We've seen probably a 10x growth in all consumer lending over the last 10 years. That's one of the fastest growths in any industry, in any country in history.
Oh.
And whilst that's offered a lot of benefits, and we'll talk about that, some of the good side of that is an increase in education loans. People have access to courses. People can finance home purchases, etc. And I think we've done a really, really good job of making these products easily accessible. I've been part of that. We've made these products some of the fastest and most convenient to access credit products in the world. And that's fed through even into the more traditional system. So banks have become much better at, for example, offering credit cards. You can now get what's called a co-brand credit card on many e-commerce websites, on food ordering apps. You'll be offered a credit card with your lunch. That's actually quite unusual in the world. India is really ahead of the curve in the way that we distribute credit. Yeah. And again,
there's a lot of innovation.
Lot of innovation.
Which is, again, mixed. Because it's
a lot of benefits.
Yeah.
But in the absence of what I would describe as sort of healthy consumer education, we don't teach it in school.
You don't teach it.
Our parents don't really teach it to us.
Yeah.
And it's not a topic.
There's no course it sounds silly, but in a way it's like before you take any loan, you should learn about it. But obviously there's no system. The system is that you're looking at an app and there's something to, along with the trigger to buy something, is the trigger saying, it's free for you right now.
Yes.
That's all you see. Yeah. And you're like, okay, I'm pressing 2 buttons. What do I know? I don't care. I'm 20 years old. I want to buy it.
Yeah.
But I haven't learned anything about it. I have no idea what's going to happen to my credit score.
Yeah.
So why do you think it's jumped up so much by 44% to 33,000 crores?
Yeah. So one factor is obviously the technology. We have an incredibly advanced technology stack in this country. And I'm not just talking about things like UPI. We also have the most digital data in the world for credit scoring. Everybody's online. Everybody has a digital footprint. Unfortunately, we're also a country that doesn't get, let's say, paranoid about data confidentiality. So it's very easy to find data and share data about people, which makes it very easy for banks to do quite accurate underwriting about their customers, and that makes it easier to lend. At the same time, we do have a rising middle class, exactly as you described. The opportunities to consume, to shop, to experience are growing exponentially. And there's no reason why consumers wouldn't take advantage of that. It's completely normal human behavior. All over the world, throughout history, this is what humans do. Humans want to have the best life they can, provide for their family, look after their children. This is normal behavior. But we do believe that there should be an element of exactly what you described, a sort of education process that we go through that helps people understand the risks that are associated with the rewards. Because getting into trouble, especially in your early years, can massively detrimentally impact your financial health later in life.
You've been in a system which understands, how these things work.
Yeah.
So what I just wanted to understand, like every day you see, banks and credit cards, like you said, and they tempt us with so many goodies. They always say free EMI. You get a call all the time saying EMI, lounge access, and all these amazing goodies. I know that you're a credit card perk fiend. So would really appreciate if you could break down how does it work? Who is getting these benefits? Am I paying for them in some way that I don't know? What's happening?
Yeah. Okay, first I have to say something controversial. Wow. Banks are not on your side, okay? And this is, again, true all over the world. Banks are like casinos. They always win. And that means, as consumers, when we interact with a bank or a financial institution, we need to go in prepared and we need to make the system work for us. Because the system is almost always designed so that the bank makes money irrespective of what happens to you. And I think a lot of people are aware of that in, for example, the mutual fund industry. There's a lot of excess fees, et cetera, et cetera.
But that's such a good point that you're making, which is that because the advertisements that you see, it'll be a nice family.
Yeah.
Me, my wife, and my 2 children, and we're so happy because XYZ bank has given us something.
Correct.
Whatever it is, a home loan, a car loan, a housing, blah, 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 blah. And on one level, that's good, but obviously they're not doing it for altruistic. They're not an NGO. They have to make money.
Of course.
So, I'd love to hear how you break that down.
Banks, including Indian banks, are the most highly valued, i.e. the most profitable companies in the world, always. And the reason we have such strict regulators in the financial industry is because left to their own devices, they would almost always inflict harm on the economy and the customers.
It's a corporate mentality.
Absolutely.
Basically. Profit first.
Correct.
Yeah.
Again, India's been really good on this regard because we have good regulation.
The RBI
is excellent. They have created a very stable banking industry. Our bankers are actually some of the most professional in the world. But look at countries like Argentina, Venezuela, even America. It's a boom and bust cycle because banks are inherently greedy. They're shareholders'
the regulation, basically it's a regulation issue.
So they have to be reined in to protect the customer. That means, as a customer, you are at risk the minute you start interacting with a bank, a fintech, an NBFC. Their game is to make money out of your mistakes. Right. I can't emphasize that enough. So I am a big proponent of credit cards and zero-cost EMIs. I use them actively in my own life, and I've made significant financial gain and financial independence because I use those products intelligently. But I always say to young people, be really, really careful getting into that. If you are not somebody who can remember dates, remember numbers, understand, interest rates, compounding, etc., then it's a very dangerous game you're playing.
So you really have to look at the fine print.
Absolutely.
Basically.
Step one.
Because it's all in the fine print.
It's all in the fine print. Is a zero-cost EMI really a zero-cost EMI?
Right. It's not, right?
Very often not. Very often not. So there are 2 big ways a zero-cost EMI can hurt you. Number one, there will be hidden costs in the processing of that EMI. So you might think you're paying zero interest.
And you are paying zero interest per se because they're not charging you interest.
Correct.
But they're charging you something else.
A processing cost.
Right.
And the processing costs I have seen can go as high as 8%. Now that is a lot of money. If you're buying, if you're buying a 1 lakh product, that's what, 8,000 rupees. That's an enormous amount of cost. So that's not zero cost. That's
interest.
Absolutely.
Right. Disguised as processing cost.
Secondly, if you by any chance forget to make your payment or are delayed in any way, and that can happen for a variety of reasons, you can be paying a late payment fee. And again, these are much higher than people realize. $500 is normal. They can even be as high as 1% per day, which means you could have taken out a 5,000 rupee BNPL or EMI, and it can quickly become something like 8,000 rupees that you have to repay. Again, it may have been marketed as zero cost.
Right.
So read the fine print. We're so lucky today in the world of AI that we don't have to just sit and pore over like a 3-page terms and conditions.
Sometimes.
Yeah. Put it into an app, put it into AI, or just Google, use what's online. There will be other customer reviews. Right. There'll be warning signs on YouTube about certain brands. So do your research before you click. Really, really important. Step one.
I really avoided asking you to subscribe till now, but my team has put a gun to my head, so please subscribe. Most people have no idea what their CIBIL score is. I don't think I know what my CIBIL score is. And yet it's probably more important than your degree.
Yes.
What is it and why is it so important?
What it means is when you take credit early on, you need to be even more careful and conservative than might come naturally to safeguard your score so that later in life, when you really need a loan, maybe you really need a home loan or you need a car loan or you need an education loan, you will get it at the highest approval rates and the lowest cost. If you mess up your score early on, maybe because of a BNPL or a small ticket loan, you're putting your future financial health at risk later down the line. And it's meaningful. I work with a lot of customers who, by mistake, took often a credit card when they were like just coming out of college in their first job. They got offered a credit card like on campus or at the airport or something like that. They took out like a 50K credit limit, maybe spent it, on a holiday or whatever, forgot about it, carried on their life, didn't need credit. And then this is a very funny example the other day. We had a customer who got married. His wife applied for a credit card in her name at their joint address, and she got declined. And when she inquired as to why did she get declined, because she thought she had a perfect credit score, it was because her address was flagged in the bureau as the address of a defaulter. And that's how they worked out that he was the defaulter. He actually had no idea. He thought he was pretty sensible about credit. So he had ignored this defaulted
What
loan.
was the default?
It was only about 50,000 actually on an old credit card, but it basically blocked his wife from getting normal financial products today. So imagine how embarrassing as well for her family, for his family. So he was actually very keen to pay that off and rehabilitate himself. There are many, many, many cases like that. Don't get into a situation like that. Even if you think you're not borrowing at the moment, you should always know what your credit score is. I think it will one day become really important, not just in the financial industry, maybe even in the jobs market, maybe in the marriage market.
It's already important in the marriage market.
I think so. People ask, right? I've heard of this. It becomes a credibility. This is what my credit score is, because it's a really, really important piece of your biodata, in my opinion. And there will probably be a scenario one day where even landlords will rent or not rent people basis their credit score. These things are completely normal in the US, and we have all the infrastructure to do the same here. So take it seriously. Having a good credit score doesn't just unlock loans. It may determine things as important as who you marry and what job you can get.
It's definitely more important than your degree, I think.
100%.
The way things are going today with AI.
100%.
Focus on your credit score more than your degree.
Yeah. And then let me just talk about credit cards for a minute, because this is something I'm very passionate about.
Yes, we should talk a lot about credit cards.
Yes, we should. Yeah. They are a friend and a foe.
Right.
Okay, so credit card is one of the easiest and best ways to smooth your spending. It's one of the best ways to build your credit score. And having a good credit score early in life leads to a lot of benefits later in life, which we can talk about.
When you say smooth your spending, what does that mean?
So I'll give you an example. If I need to book a flight, right? I need to spend $10,000 to fly to Delhi and back.
You're lucky if you get that, but
Yeah, true, exactly. So if I was to spend the 10,000 this minute out of pocket, that's 10,000 rupees that could have been in a savings account, an FD, a mutual fund, right? Instead, I could delay that spend by putting it on my credit card. That gives me at least an extra 30 days where the bank is paying and I don't have to reimburse them until the next due date of my cycle. And that means I can keep my savings locked up, right? And keep earning interest. So again, if you're smart about using credit cards and if you're very organized and you have a good memory and you're good with numbers, you will never miss your repayment date. You will pay the full amount on time every month, which means you're basically getting 30 days of free credit every month.
But then how does the bank make money?
So that's the sad truth. Yeah. I'm afraid about 30% of people do not pay on time.
Oh, so it's like an insurance thing. They make money on the defaulters.
Exactly.
So if I'm paying my credit card bill every month, I'm a loss leader for the bank.
You're a nightmare. You're a complete nightmare to the bank, especially if you also use the lounge access, the points, and all the things.
So they actually don't make any money on the 70% of people who pay regularly.
They make a little bit. I'm exaggerating. They make a little bit in what's called interchange. So when you do a transaction, they get paid a little bit of money by the merchant.
But peanuts.
But it's peanuts. Where they make the bulk of their money. And you can go this minute and download the financial statements of any bank and use ChatGPT, whatever, look for fee income.
Right.
It is the number one revenue in most banks. Okay? And fee income, honestly put, is when you mess up and you, by mistake, miss a payment on your home loan, your credit card, whatever. Okay? When that happens, they make pure profit on you. They know you're probably going to pay in the future, but they keep you trapped in this sort of cycle of every time you make a mistake, they extract a bit more of your hard-earned money, but you keep with it because you like the product. 70% of people are on the other side. We're the people that are called transactors. We transact every month, we pay it off in full, and we are probably more likely to use all the benefits because the more you transact, the more points you get, the more savings you get. I personally have not bought a mobile phone or any gadget, actually, probably in the last 5 years because I obsessively save up my points and optimize my points. I have different cards for different transactions, and every year my credit card company pays for my new mobile phone, my stereo, whatever. So points can be incredibly lucrative if you're somebody who never gets into trouble on the late payment fees.
And how many cards do you have?
At the moment, I have 5.
That you use?
Yeah.
Wow.
Because I am an optimizer. You'll find different cards give you benefits, for example, on FX, if you travel a lot, which I do. Some give you benefits when buying groceries.
Airlines,
exactly. So I do a lot of that optimization. I'm not a card influencer. I'm not going to recommend any cards.
Of course.
Do your homework, do your research. But again, I really want to reiterate this point. If you're new to these products and numbers are not your thing and you don't use like a Google Calendar, be very careful. One max.
This 5-card thing is for super users only.
Correct.
I'm very bad at it actually. I am the opposite actually. I'm like, I want one card. I'm not going to... I get irritated when people are like, just give me 1 second, and they open their wallet and they're like, oh, should I use this one or this one? So I'm like, Jesus Christ, just pay for it. So I'm the opposite, but I think it's a very good advice for a super user that if you have 5 cards, you really, and if you manage it well, like you're saying, your Google Calendar, and if you're fully on it, then you're those 70% of people, because you do not want to be those 30% of people who are basically funding the entire banking industry.
Exactly.
Because all the money that the banks make, the trillions of dollars of profit, are those 30% of people who are not able to manage their systems. We just spoke about the 30% who are funding everything. You don't want to be those 30%. How do you avoid that as a young person who is just entering the system and you have all these options? You want to buy an iPhone. You want to buy, everybody wants to buy an iPhone and it costs like $1 lakh. And you have all these options. What do I do?
Okay, so 30%, remember that number. It's really relevant to everything in finance. It's like the Fibonacci code of finance. Okay, number 1, when you're taking out loans, okay, always do this mental maths. Is my EMI burden per month more than a third of my income? Okay, this is a ratio in finance. Bankers use it the other way. So you will not be approved a loan if the cost of that loan is more than a third of your income every month. This is called the debt to income ratio. So always keep your EMIs below a third. If you're earning $60,000 as your salary, never have EMIs going out in any month above 20,000. Got it? That's really important. And again, the bank won't necessarily tell you this. If you've been behaving well on your loans, it's always in their interest to just load you up a little bit more, a little bit more, a little bit more. The more they give you, the more chance you're going to make a mistake and get into that fee trap that we talked about. So first of all, take ownership of your own financial health, work out what is the right amount for you. Another very important trick, when it comes to credit cards, okay, there's something called a credit limit. This is the maximum amount of money you can spend on a particular credit card at any time. So let's say you got 50K when you first took out a credit card and you comfortably spent some of that, paid it back, and then they extend it to 1 lakh. Now your credit limit is 1 lakh. The trick of building a good credit score is keeping what's called your credit utilization below 30% again. So this is why 30% is such a magic number. That means at any one time, even if you have a 1 lakh limit, never have more than, let's say, 30K outstanding. Does that make sense? Keep your utilization low. The lower your utilization and you repeatedly paying back every month, the higher your credit score goes. Right? Because it's kind of sending a signal. If you think about it, what you're saying is, safe. I'm very sensible. Even though they gave me a lakh, I didn't spend it. I can control myself. That's a very powerful thing in building good credit behavior and creating a good credit score. So I have like a 10 lakh limit on one of my cards, but I never have more than 1 lakh outstanding on that card. And that has directly improved my credit score. I know that because I know how the system works. So you have to be a little bit clever. Again, it's a bit like a casino. You've got to understand the rules of the house. And this is where it gets a bit boring. Every month, you should have your outgoings below 30%, your EMI that you've already committed to below 30%. And then the dream scenario is that you then save another 30%.
Right.
Now, I know most people are doing that maths and going, oh my God,
30%,
impossible, impossible.
Yeah.
But what you should do is next time you get an increment, for example, adjust it in that direction.
Right.
An increment doesn't mean more EMIs or more spending.
Right.
It should always mean more savings because the goal is to get to that 30%, okay? The human brain is not designed to understand compounding. And compounding is both friend and foe. Compounding is how you get rich. Compounding
is what... The human brain is not...
It's not. I always think this is funny when people say, Elon Musk is a billionaire. And it kind of sounds a bit like a millionaire. Like maybe, they're kind of the same. But if you say, for example, what is 1 million minutes? Okay, if you went back in time 1 million minutes, you're going back in time to like 2023 or the end of 23, 24. So it's like 2 years ago. Okay?
My mind isn't complete.
But if you go back in time 1 billion minutes, you're going to like 100 BC, like the Roman times. You're wiping out all of human history.
Right.
And that's the difference between 1 million and 1 billion. Again, you cannot possibly imagine that concept, right? So the same thing works on the negative in credit when you get into trouble, but also on the positive. 500 rupees a month invested at a return of like 10% can quickly become lakhs and lakhs and lakhs. It really can. So try and think about your money every month. When your salary hits, what do I have to pay? You probably have some outstanding EMIs. What do I want to save for myself? Let's put that $500 aside. I'm going to up it a little bit. You can do it. You can afford it.
I'll
500. Put that in a long term. Lock it away. Don't think about it. And then, in an ideal world, have a portion of that savings money in some kind of like FD, which is your rainy day fund. That's your emergency cash.
Right.
If there's any scenario, like you lose your job, hopefully that won't happen to you, or a big bill you didn't expect, a big medical cost, for example, for somebody in your family, you should always have on hand that amount of money. For some people, that might be like $50,000. For some people, it might be a couple of lakh, actually. Think about your life,
Right.
but make sure you have that as a backup plan.
I really don't think you have to keep telling them to subscribe. You know, if they like it, they'll subscribe. So, I mean, I think it's fine. You know, you were a founding member and former president of the Digital Lending Association of India, the DLAI, and also a member of the Innovation Council of the National Payments Corporation of India. The high level data that you must have got on, you know, on very granular things and like how do people behave when you know, things go right and things go wrong. I think that's something that I would like to understand. You know, I think our audience would like to understand that as well. So what is the real difference between using BNPL and a credit card?
Yes, great question. Obviously, I'm a bit of a BNPL fan, have been called the, you know, grandmother of BNPL in this country. And I'm proud to say, I think we designed a BNPL product that is actually fair and generally good for customers. And I can give you some examples of how it benefited customers. BNPL typically is a one-time small ticket loan that gives you, again, a way to spread the cost of something over a number of installments with predictability and with that confidence that you can make that payment every month, versus a credit card where there's always that temptation to either add on more spending or roll previous spending, i.e. not make the monthly repayments, right?
So you're saying BNPL is more fixed towards a certain
One transaction,
split
the cost. So what it does is sort of take some of that self-control out of the mix. The BNPL provider will tell you every month what you have to pay to repay for the product you bought a few months ago. And that's great. Again, if used sensibly, it's a brilliant product.
You'll have notifications on the app.
Exactly. They'll teach you how to pay on time. Most BNPL providers are actually not banks, interestingly. They're often fintechs, NBFCs, or they work with an e-commerce company. And interestingly, the margins in BNPL are quite thin. And it's actually quite expensive for the BNPL company if you mess up. So they're often quite good at reminding you to pay on time. So that's why I like BNPL. It can be a great product for somebody new to credit, somebody learning about repayments and practicing repayments.
Why is it more expensive? Because that sounds like the opposite of what we said for banks.
Yeah. Well, one thing, the BNPL company does get paid by the merchant or the distributor in every case. So if you use it on a food ordering app, the food ordering company is actually paying all the costs to the BNPL company. Similarly, I'm sure you've seen when you go and buy a new phone today, there'll be a zero-cost EMI. Zero-cost EMI in BNPL can sometimes be used interchangeably. Mm-hmm. And a zero-cost EMI on a phone is not zero cost to the phone manufacturer.
Right.
The phone manufacturer is paying the EMI or BNPL company sometimes up to 20% of the cost of the phone, which is quite
it's
staggering.
Like a discount.
Exactly.
That's being passed on to...
Correct. They could give you a discount, or they can pay the BNPL company and you get that spreading of your payments. So generally, BNPL is good, and normally the zero cost is correct. It isn't actually any additional cost to you unless, again, you make a mistake or mess up. Where I think it gets a bit troublesome is when it becomes too easy. And I think there are two scenarios. One is what we call loan stacking. So you've had a BNPL product on your phone, or maybe you used it on a food ordering app, and it was easy, and you paid it back on time, and it cost you nothing. And you think, this is great. So then you repeat the behavior on your next transaction, your next transaction, your next transaction. And we all know people that do this. They could have 12, 13, 14 BNPL outstanding. That is not
on
a
different
good
apps.
situation. Exactly.
Not on the same app.
On different apps. It's very unlikely the same app would give you multiple loans, but you could have it across. Now that leads to a lot of complexity in your life. often the due date where the repayment goes is different. So you're going to get shocked some days because money will have disappeared from your bank account. It's just hard to keep track of. So I'm very against this idea of loan stacking. If you use BNPL, try and stick to one place where you do it and one repayment date for all your EMIs. Then it's just easier to manage. That's
so don't take more than one BNPL
Correct.
loan.
Another issue we have seen, and I'll be very honest about this because it's a shame, because it was my industry and it makes me sad when there are bad actors in the industry. But there were bad actors, and there are, who will induce you into taking a BNPL, even if you didn't want it, and somewhat illegally, to be honest. The systems have not been set up properly. They might not be doing KYC. You could just end up stuck in a loan that you weren't even aware was a loan. Now, there's been many situations I've seen in the...
Can you give me an example?
So right now, a lot of what I do is work with customers to fix their credit scores and clean up the kind of mess they got into by taking too many loans. Sometimes
that's your current business.
That's my current business.
Yes.
And we'll look at somebody's credit report and we'll say to them, do you realize you have 12 trade lines? Trade line is the word that credit bureaus use for loan. We say, you realize there are 12 loans outstanding? And he says, no way, I've got 2 credit cards, a personal loan, and I did do this BNPL once, but that's it. And then we go through it and we say, wait a minute, one is for 450 rupees a year ago, and it looks like it was on a food ordering app or something like that. Wow. And he genuinely had no idea that that was a BNPL. He didn't get repayment reminders, went into default on that, and that has been recorded in the bureau as a default. And unfortunately, the algorithm that the bureaus use is not public. We will never know. And so we can't work out whether that 400 rupee loan has wiped off 200 points of his credit score or 10 points. It's actually very hard to calculate. So it's not worth getting into that situation.
So basically, I'm on an app ordering some food.
Yeah.
And it's just some button comes up rather than pay. Next to the pay button is some button, for example, saying, some free thing or whatever. Yeah. And I just click that. I don't even know what it is because it's like it's 500 rupees. So I don't really want that loan. Yeah. And the order gets processed and the food comes to me. But somewhere a loan is set up in my name.
Correct.
And it accumulates over time.
Yeah.
And before I know it, it's multiplied, and B, it's destroyed my credit score.
It can very well happen. This is a very common phenomenon at the moment. We have situations where a customer has come to us and said, I just applied for a job in a bank, and they pulled my credit report, and they said I have a bad credit score. But that doesn't make any sense because I don't use credit. I don't have a credit card. I haven't taken any loans. And then we pull the credit score and we discover that there were 2 small transactions 2 years ago on a payments app that they had no idea were being recorded as trade lines. So it's a really, really frightening phenomenon. And I would actually say to everybody, irrespective of whether you think you are using credit at this moment, check your credit score. It's free to do. You can download what's called a consumer credit report on many, many websites and apps. People like Bank Bazaar, Pesa Bazaar, Good Score. There's many, many, many in the market today. Mostly it's free. Or maybe you'll pay like $40 max, and just check what is on there. You will be shocked. A significant percentage of people who were not aware that they had taken credit, unfortunately, do have because of some of these BNPL products.
How can you fix your credit score so you don't get trouble 10 years later?
Yeah, so that's a lot of what I do these days is help people, clean up past mistakes and then improve it going forward. Okay, so to clean up things that happened in the past, if you think that it's wrong, if you think that it was misreported, you can actually go back to the lender that has made that mark on your credit score, and you can do what's called raise a dispute, where you can say, I dispute that was a trade line. I do not believe that I took a loan at that time. And normally, a lender in that situation will do their best to reverse it, especially if you threaten to go on social media and things like that. So be very vocal in correcting any of those mistakes.
And how long do you have before the mistake? You have to keep checking.
I would say genuinely it's very hard after a year, because what happens is then the lender's done their kind of accounting, right? At the end of the year, it's very hard for them to go back.
It's gone into
it could
it's
have
solidified
gone into,
in a way.
Correct, exactly.
Your,
so try
your
and
bad score is kind of written in stone.
Yeah, exactly. So I would say always check, at least every 6 months. If you can check every 3 months, that's even better. Nothing wrong with being on top of it. And there will also be scenarios where a fraudster has actually taken ID in your name and taken out a loan, on your behalf. These scenarios are rare, thankfully, but they happen. And that's another reason, even if you think you're not borrowing,
right,
it's important to check your credit score frequently. And again, in that situation, you would raise a dispute. If you think that there has been a loan made in your name, you might get clues, you might get SMSs, you might get a random email that you weren't expecting. But generally you won't know, to be honest, because they may have given a fake contact number, but they've used your KYC. These are very real scenarios. So always keep on top of your credit score. Keep checking your consumer report. The consumer report is fantastic. It has a lot of information. It will tell you the name of the lender of record, so exactly who is the legal entity that has given you a loan. It will have all the information about the loan on the report. So you can take that report and go back to the lender and say, this is a fraud or this is a mistake, please fix it. In the case where you made the mistake, unfortunately, it's not so easy. The lender will probably have evidence that you were paying late, you did get into trouble, and there's really no way they can correct your mistakes. That's a really clear distinction. So you can only raise disputes when you have evidence that this was a fraud. In cases where you've messed up, I'm afraid you're on your own. So that's why it's so important not to make mistakes. However, it's not irreversible. There's lots of steps anybody can take to improve their credit score going forward. And I talk about this a lot, I write about this a lot, but again, it's back to using credit intelligently for you. So it's tricks like taking out a fresh credit card with a fresh limit, but only spending a very small portion of that. It's quite hard to get your score to go up. It's hard work. There's a lot of things you have to do, and I'll give some clues. But it's very easy to drag it down again. It's exactly like a computer game.
It's snakes and ladders.
It is, it's snakes and ladders. And everybody wants to pull you down, but no one wants to push you up, right? The goal is to get above 750 as quickly as possible.
That's a great line, though.
Yeah.
Improving your credit score is exactly like snakes and ladders.
Exactly.
It's very hard to go up the ladder, but one slip and you're back down.
Literally. Exactly right. Exactly right. So you'll probably start life on a small credit, let's say a 50K credit card, 30K, 50K credit card, maybe an EMI. A lot of people start with like a phone loan from a MBFC in a shop, even a two-wheeler loan. This is a very common starting point today. So the typical first loan for somebody is around like 30 to 50K. That's the norm in this country. And that could be on an app as well? No. Yeah, you can. Yeah.
Okay.
A lot of Zest customers came in at that level. About 40% of our customers at Zest took their first loan with us, and it was in that kind of ballpark. And most people will take a loan, either a credit card that they repay every month, or an EMI that lasts, say, 6, 9, or 12 months, such that their repayments every month are maybe like $3,000 or $4,000. That's kind of a sweet spot as well. That's where most people feel comfortable. Now, if you do that successfully, let's say for 6 months, you repay on time, every time, no mistakes, no late payment fees, no phone call from the bank, just pay on time, probably your credit score will come in around 700. Yay! And that's great. That's good news. Now, you really want to get it above that. If you get into the 800 territory, the world becomes very exciting. I'll tell you why. But how do you get there? First of all, I'm afraid you have to take out a couple of loans. So one trade loan.
Don't be afraid. That's a positive.
It's a positive.
I want the money.
Done responsibly. So maybe add another credit card. Again, keep within the limits we already talked about. Make sure your total outgoings are still below 30%. Maybe take out a loan that's going to improve your future life. So a very common type of loan that people take today in that age group is to do, say, an online course. So an education loan to improve your earning potential. Let's say you're in digital marketing. You could take a course in Canva or AI design, I don't know. And that might lead to an increase in your future salary. That's a great reason to add on another loan. And again, if you pay that on time every month, what you've shown the credit bureau is, I can handle a slightly more complex situation. I can handle having 2 outstanding loans at one time. I can budget in my head and make sure I pay both of them even on different dates.
They know that you have 2 loans.
Absolutely.
And they give you a benefit based on 2 loans.
100%. They give you a significant benefit.
A complexity benefit.
Exactly.
A complexity
bonus.
Bonus.
He's on top of this stuff. This
Right.
guy is on top of it.
Right.
He knows what he's doing. He's not a complete mess,
Wow.
right? And that's exactly how the credit score works. The next layer, this is when we start going into the really, and I'll just say, I'm at nearly 900, so I know what I'm talking about. To get to 900,
You better be.
you have to start doing some of the things.
You help build the system.
Correct. I know the system, so I play the system.
And that's what we need today. We need your advice on how to game it.
That's really important. So top tricks to get to my level in the game of credit. Top tricks, number 1 is keep well below your credit limit. Okay, so again, this is that concept of utilization. Even if the world is happy to give you lakhs and lakhs and lakhs, keep it well below that 30%, maybe below 20% even. So if you always have a much lower utilization of the credit that people have given you, they will keep pushing you up, because that shows another dimension to your behavior. You're not just predictable, reliable, you're also very good at self-control. That's excellent, okay?
So they're actually doing a behavior analysis of you, basically. It's all behavior. It's all emotion, ultimately.
It is. I say, when I used to hire people in Zest to work in that team, I'd say you're a psychologist. You're here to assess human behavior, psychology, emotion, and that's really the secret of lending. The best banks, the best lenders understand human psychology. One more really important thing on the credit score, and a lot of people are not aware of this. One absolute way to damage your credit score is what's called an inquiry. This is when you willy-nilly apply for loans across maybe more than one lender. Let's say you say, this morning I'm going to try my luck. What new credit cards can I get? And you go into a bunch of applications, maybe through one of these websites like Pesa Bazaar or Bank Bazaar, who try and match you to different offers. Every time you make that application, that lender is pinging the bureau. They're leaving a mark on your credit score. And we've seen examples where somebody's lost 100 points because they just made a bunch of inquiries. And they say, I didn't mean to. It's like, pressing that button on the metro or something. Like, don't do it. Just control yourself. If you need a new credit line, if you want to take a new credit card, do the research first. Be sure about which one will approve you and go only for that one. Do not make multiple
Don't window shop.
No. Very important. Right. A lot of people...
Or window shop, but don't enter the shop.
Don't enter the shop. Don't give them your KYC. Very important.
Right.
Exactly. So you can get to the inquiry point. You can discuss offers. You can research offers. The minute you submit KYC, there is a mark going on the bureau score. So that's a really key point. Why is mine 900? Because I don't do any inquiries anymore. I do my research beforehand. And then I guess one final point on that, it's obvious, but the surefire way to always get approved is to have a high credit score. So it's better to do all this boring stuff, control yourself for a number of years, get your score above 750. When you're above 750, you're considered prime. Those are the people who will get all the offers. You will almost always get approved. The only reason you would not get approved if your credit score is above 750 is because either you're currently out of work, so they can't see any income coming into the system, or maybe you've taken out too many other loans and your outstanding is higher than your income.
And you said revolving. What is revolving debt?
Yes, this is a very, very important point. So we talked about credit cards being, your best friend and your worst enemy. They're your best friend when you pay them off on time and you pay the full amount every month. That gives you complete peace of mind and 0 fees, right? You don't pay any extra fees to the bank.
The full amount, you mean whatever you've spent?
Whatever you've spent, exactly, the total outstanding. The bank, cunningly, will offer you 2 options every month. Watch for this. They'll either offer you to pay the full outstanding, that's everything you spent in the last 30, 60 days, or they'll say, just pay the minimum. And they make it really tempting, actually. These days, when you go into the app, they'll be like, just click here, just pay the minimum. So that's another trick, which is to turn you into what's called a revolver. This is a customer who revolves their credit every month, and guess what? They charge interest on that. So let's say at the end of this month, you had spent 10,000. You didn't pay it all off. You just pay the minimum, maybe $500.
500, it's so little, huh?
It can be.
Wow.
Yeah, it's up to the bank and you. But
and I'm like, wow, I'm paying 500.
Easy.
And I think it's happened to me before, and it's like, you're not even thinking. You're just like on the app, and it's
That's
saying,
easy.
you get a big flash saying, pay 500.
Yeah.
And you're like, okay, I mean, something will happen, but the bank is okay with it. So I'm not really
haven't done anything wrong.
I don't have to think about it, basically.
No.
Yeah.
What you've just done is create a long-term loan now in your name, which will be charged at least 30% interest. Sometimes as high as 42, 48% interest. It's really frightening.
Wow.
And what might happen next month is you'll realize that interest has been added, the number's gotten bigger, plus all your new spending through the month, and suddenly the number's looking really enormous. And so you'll say, let me just do the minimum again, right? That's a normal behavior.
All right. It's suddenly that 10,000 minus 500
Correct.
is 9,500. You said, okay.
Plus
whatever.
interest.
Then now it's 3% a year, blah, blah, and you spend 3% a month, 30% a year.
Yeah. And you spent some more. So suddenly it could be 20,000.
20,000. You're like,
and
whoa.
then it's really frightening. So then you just revolve again. And this is what's called a revolver. Somebody who just keeps pushing out for another day the problem of their balance. Bank loves it. He's making 3% a month on that, at least.
And
It's
that's the
brilliant.
business of the bank.
That's how they make money. That's literally how they make money. So don't be that person. A third of people are in that situation every month. And actually that number's growing in India today. And it's really important not to become that person. And talk with your friends about this. Make it, a taboo. It's not a good situation to be in. It puts you in that burdensome feeling where the number just keeps growing and you're paying for nothing.
Never pay the minimum.
Never pay the minimum, if you can.
I mean, it's such a catch-22 situation, right? Because you're broke, so you take a loan.
Yep.
But because you're broke, no bank will touch you. So you go to a lending app or a BNPL company with crazy rates, and you take it because you're broke.
Yeah.
And you started with 50K, for month-end stuff, but you can't pay it back. Then you take another 30K, and then another and another, and before you know it, it's like 2 lakhs.
Yep.
So how do you get out of that?
Don't get into it.
Don't
get into it in the first place. Let me give you the other way around.
Right.
Okay. This is how it should be done, and then compare and contrast. So it's a funny story, but the very first customer we had at Zest was almost too good to be true. Okay, it was a young guy living in Patna, in actually a very small town. He was working freelance, doing bits and bobs, didn't really have a great salary. Exactly what you described. No bank would have given him a credit card. He wanted to buy a mobile phone, a second-hand mobile phone. So there wasn't even any, consumer durable loan. So we lent him $30,000 to buy the mobile phone. Then, a few months later, he came back and bought a laptop, okay? And I think he bought a few other objects over the next couple of years. And then he progressed to a personal loan, actually. He took maybe 2 or 3 lakh. By this point, his credit score was excellent, superb. I think he was probably at 850. So we were happy to keep lending to him. But then we noticed his salary had gone up significantly. We carried on the relationship. And then a couple of years later, we realized he'd disappeared. We hadn't seen him for a while. I actually got in touch with this customer and discovered in that time that he'd been building his credit score, he'd also been building his credit journey. So he used the personal loan to actually do a course, a master's in Python. I think it was some sort of like computer science master's, but he particularly became this like Python specialist, He used that to get a job in Bangalore in a services company. He shifted to Bangalore. By this point, his credit score was like excellent. He then, believe it or not, got a home loan at the age of 28, bought his own property, so had no rent, obviously had a home loan, but it was well within his limits. And I went to visit him, and he had this amazing apartment, like really well set up. He was doing extremely well. I just checked his LinkedIn, and he's gone from strength to strength. He's like a vice president in a tech company today. And the reason I tell this story is he used credit super cleverly. He used it to get this very, very good score, which empowered him to take lower and lower cost loans later in his life. So the home loan maybe came at 10%, right? Which actually ended up saving him money from rent. Most of us get trapped into paying a fortune on rent. I love that example because it was one 30K loan on day one that got him to that point, let's say 5-6 years later. But importantly, he never messed up. Right? He didn't shop around. He stuck with one loan provider. That's a good trick. He gradually grew the outstanding, but kept his utilization well below the limit. And then actually, intelligently, he went out into the market and looked for the cheapest cost of credit later in life and used that to his advantage. So a strong credit score unlocks for you financial freedom that many of us never dreamt of when we were in our early 20s. Imagine having your own house at 28, and that's all because of the work you did from day one on improving your credit score. Be that person.
A lot of hard work, but nothing is easy, basically. You know, I know a lot of people today who are using BNPL apps or credit cards, for everything from like a small Myntra payment or vacations, or of course buying some electronic thing. When does it become dangerous? What warning signs should we look out for? Because we all are going to do it.
It's a great point. I think there's a couple of ways to think about it, and I really hate this preaching that we sometimes hear, especially from financial influencers, that you shouldn't use credit for consumption, et cetera, et cetera. That's a bit patronizing. I trust that most people can differentiate good credit and bad credit.
Not only patronizing, it's just. That's like saying, it's exactly like saying, don't have any sugar.
Yeah, don't eat cakes.
Great.
On your birthday, you should have a cake. Of course you
human.
should.
A little more than your birthday.
Yeah, maybe once a week.
I know you're very
I eat a lot of cakes.
Oh, you do? Okay.
So it's exactly the same. So a couple of things to always think about. One is, if I take out this loan, is it somehow improving my life, right? Is it somehow adding experience to my life? Versus I just suddenly wanted a dopamine hit from buying this thing. So impulse spending, buying a new shirt or something on Myntra, is probably not the best use of credit. Use that for when you have excess surplus, right? When you've just been given a bonus or some money for a wedding or birthday, whatever. That's the time to make those splurges. Credit should always be for what we call planned purchases. Is it something you need in your life? That doesn't mean it can't be a consumption thing. I am actually not even against people taking credit for a holiday if it's done sensibly with planning. You were planning to make that purchase anyway. And the availability of credit does not make you buy a more expensive item. Always live within your means. One of the unfortunate sides of credit, especially when you're young, is you always think you'll be richer in the future when that repayment comes due. Imagine a scenario where you're not. If your income stays exactly the same, bit depressing, can you still afford all these things? Are they, congruent with your current income earning potential? Don't factor in any improvement. Very important.
That's a good point. So when you take a loan, keep your current salary as the base for the future as well.
Absolutely.
Do not extrapolate any future earnings into your current loan. You have
really important.
You have to be able to pay your current loan.
Correct.
With your current earnings.
Exactly.
Just be in the present. Basically.
Yeah. Just think about what you take home today. Would I still buy this today if I had to pay the full amount? That's really important. If availability of credit suddenly makes you buy something 2 or 3 times more expensive than you would naturally have felt comfortable buying, then it's wrong. That is not correct. That's really important.
the Reserve Bank of India has tightened rules on BNPL. How does that, affect young customers?
Yeah. Actually, it's really good, in my opinion. I think a lot of the challenges that we've been discussing, right, which is that, look, young people all over the world always are more risk-taking, more optimistic, and those types of characteristics lead to the higher credit burden that we're seeing. And there's some really frightening stuff coming out of the data. It looks like something like a third of all personal loans today are going to people who have more than 5 outstanding loans at the moment. And if you just think about how it feels to have any debt outstanding in your life, having 5 or 6 on top of your head is a very, very burdensome feeling for most people.
And that person who has 5 or 6 loans is the prime target.
Correct. Because
for all the reasons we mentioned.
Correct. He'll be targeted by the BNPLs, by the fintechs, because what's the problem of adding another few thousand rupees to his burden, right?
That's basically predatory lending.
Correct.
Basically. It's a classic example.
So that's what I think regulators are clamping down on. They're trying to make it harder for the behavior you've described, which is that impulsiveness of taking credit. There's a few things they've done. One I really like is called a key facts statement, KFS. Before you take any loan, the lender has to prove that you have read a key fact statement about the loan. Print. Exactly. And it has to be presented in a way that a customer can read it. It can't be 30 pages. It's supposed to be 1 page with the key terms, conditions, prices, etc. And they're actually not allowed to disperse the loan or let the transaction happen until they prove that you have read that. Now that obviously can get flouted. There are ways people
means the usual
smooth
thing.
it out.
You have to just scroll down and say
yeah,
agree.
Maybe. But I would honestly say, and I'm biased, but as a customer, do read it. It's fascinating. There'll be interesting.
It's 1 page.
Yeah, it's normally
then you
1
have
page.
less of an excuse.
Exactly. And it's normally written in plain English or, simple language. So just try and read it. It's useful. It's interesting. Plus, it gives you that pause to remember, I am taking on a loan.
A loan.
This is
it's
a burden.
Loan. It's something my parents
told me not to do.
Never to do in my life. I'm taking on a loan.
Exactly.
Right.
So I really like that. I think the regulator is being very thoughtful and they understand how young people behave. They're not banning any of this. They're saying, let's just create those pauses, those moments to reflect before somebody takes on another burden. Obviously, there's been a big challenge in the market of unregulated lending apps, and I think we shouldn't shy away from mentioning that. It's very easy in the digital world to spin up an app. You know that. You can all create an app in a day, and unscrupulous people will do that without the backing of a regulated bank or MBFC. So it's literally a fake loan app. They will give you money easily, but then they will harass you to get that money back. RBI are very, very good at clamping down on this phenomenon. But again, you should take it into your own hands. Make sure that whenever you're engaging with what you think is a lending app, that it is a regulated legal entity. And you can...
What are the biggest red flags that I should look for?
Yeah.
When I'm looking at, a lending app pops up?
Great question. First of all, it will be very easy. So they'll make the process super, super straightforward. Lending shouldn't be that easy. There is some friction when you take a loan. A lender should be assessing your credit score. They should be assessing your income. If they don't do any of that, if they give you instant cash, be a little bit alarmed. That's not really a good sign. Secondly, if there's no KYC, it's almost definitely illegal. KYC is an absolute must for everything. You know that. Everything in life requires KYC. You want to go to a swimming pool, you have to do KYC. So if someone is giving you money without KYC, be very suspicious, be very alarmed. And then I think third red flag, very important one, are they asking for strange information from you? A very classic telltale sign is if they ask you to share your contact list from your phone, okay? We all give permission for all sorts of things in this day and age, but when it comes to lending, be very careful. It's not legal for a lender to take permission of your contact list. That is not allowed under the RBI guidelines, and RBI are very, very good at cracking down on this.
1 in 4 new loans were given to someone who had already failed to repay another loan.
Wow.
What does that mean
Yeah.
for India and the state of things?
Yeah, that's an alarming statistic, actually, especially in an environment where, like we talked about, there's a lot of young people with much easier access. And as we keep saying, the lender doesn't really care about your financial health. So the fact that they would still lend to you, even in a scenario where you've defaulted on somebody else, shows that things are getting a little bit out of control. And it's even more important as a consumer to take things into your own hands. Financial freedom is about having financial independence and not being beholden to these financial institutions. And the fact that they're almost deliberately over leveraging people now means it's imperative to have your own decision-making power about the amount of credit you want to take on, not what is available to you. Very important.
How is this even possible, and why are banks encouraging it?
Yeah. I'm assuming in those scenarios when it's, let's say, the fifth or sixth loan and it's going to a customer who's already over leveraged and has potentially defaulted, in that scenario, it's probably one of the fintechs or somebody at the lower end of the pecking order. They're happy to extend another loan on the hope that they will make a lot of fee revenue out of the customer. So they're probably predicting a lot of late payment fees, et cetera, et cetera. They're going to make more money from the customer. That is a very, very dangerous scenario. Probably a traditional bank would not relend to that customer. And I know at Zest we had very conservative lending practices. If somebody had defaulted, we would not give them any new credit.
But what are these lending companies thinking? If I have already defaulted on another loan, and you are running behind me trying to give me a loan.
Yeah.
Aren't you worried that that I'm gonna default on everything and go bankrupt or whatever?
Actually, that's the funny thing about the modern day credit score situation. They're taking a bet that you do care about your credit score, or you will one day, right? And so that's what I mean when I say credit bureaus in this country are incredibly sophisticated and getting more and more sophisticated every day, and the credit score is becoming more important. So they're hoping they can almost harass you to pay them first to protect your score.
Like they're going to make you sweat.
Exactly.
Your sweat is
Correct.
what's going to pay
them
all
first.
their
Correct.
profits. So
yeah,
they're pushing you along that road, basically.
Absolutely.
They're stretching you out.
Yeah.
To pay their profits, because if you don't get stretched out.
And they're thinking very short term. They're not trying to form a relationship with you for the next 20, 30 years. Right. So they do not care if they completely trash your credit score. Right. That's why you have to take it into your own hands.
Data shows 27% of borrowers are taking new loans to repay old ones. Isn't that a debt trap?
Yes. This is a problem we call credit stacking or loan stacking, when you're basically taking out a loan from one lender to pay another lender. It actually makes sense. It's a normal human behavior because you don't want to get into trouble, so you want to keep the cycle going. But what will invariably happen is one of two things. Either you'll end up paying more and more and more. You'll have to take higher interest loans or loans with a higher fee load to keep up your repayments on the cheaper loan, so it's very bad financially for you. Or there's a phenomenon, unfortunately, that's called falling over in lender language, which means you'll keep going, and then one day you will just fall over and say, I can't repay any of you. And then all the lenders will take a hit. That's really bad news, which is why loan stacking is something that the industry and the regulator should be really on top of and rein in bad actors who will put more burden on top of an already overstretched customer.
It's a very fine line, basically.
Exactly.
Why does that make it extra dangerous, to share a card with someone? A lot of people give their card to their friends and get more money on, they spend more money on their card, basically. So how does that tie into this?
So even I'm guilty of one thing I do. Sometimes when I go out for a meal with some friends, there's that awkward moment at the end where everybody's trying to settle up and, some people pay by cash and some people pay by card. I will often put the whole bill on my card and then tell my friends, UPI me $2,000. That's actually quite a good idea because I get extra points for that. And in that scenario, that's not a significant amount of money that would in any way affect my repayment. I'm also getting the reimbursement immediately, so I can definitely make my credit card repayment at the end of the month. As an extension of that, we've started to see a behavior in this country, especially amongst young people, where one guy has a really good card and a good limit, and he almost lends it out to his friends. People borrow space in his credit limit and use his card to fund their own lifestyle and their own purchases. I've seen examples of customers who ended up having 5 or 6 lakh outstanding on a credit card because they helped their friends buy mobile phones. Very, very common phenomenon. He thinks he's being smart because he's making a little bit of extra money.
Points.
Yeah, he gets the points. His friends might pay him a little bit extra as a kind of convenience factor. Some of these guys, the friends, would not be eligible for a credit card.
They have the money, but they're not eligible.
Exactly, exactly. So it kind of sounds like a good idea in principle. There's 2 reasons why it's a bad idea. One is it can really screw up your credit score. Your utilization is going to go up. If you remember, we talked about that. That is not good for your credit score. And of course, the friends could default, right? So you could end up yourself in a default situation through no fault of your own, just because you trusted your friends to keep on top of it. But there's a third and final, more frightening phenomenon that's been happening, where the income tax authorities are actually looking into these cases, because if you have a credit card that's regularly showing, 4 lakh, 5 lakh, 6 lakh, but your salary is a fraction of that, it's a very, very suspicious scenario. That's what's actually legally called money laundering. And so you could actually see yourself getting GST notices, tax notices, because it looks like you're running a business through your credit card. So be really careful of that. I think a few $1,000 when you go out for dinner with friends is fine, but letting your friends use your limit to fund their lifestyle is a big no-no.
Lizzie, if you were 25 today with 0 savings, what is the exact 5-step plan you would take to have full financial security in 10 years?
Okay, it's simple, right? Number 1, take control of your budget. Understand exactly what is coming in and what needs to go out every single month. Know it in the back of your head. Number 2, account for any existing liabilities that you have. If you have EMIs outstanding today, make sure you pay them first as soon as your salary comes in. Then, number 3, make sure you are saving. This is a long-term saving plan that you need to set up as early as possible. Even if it's $200 a month, the power of that money early on in your life, compounding, will earn you enormous riches later in life. So start saving, even a tiny amount. And then number 4, make sure a portion of that savings is going towards your contingency fund. This is your rainy day fund. This is maybe 1 to 3 months of monthly spending that you keep in an easily accessible liquid savings account, so that in the worst case, when you may find yourself out of a job, you've always got that backup plan. And then number 5, only once you've done all of those, start to use credit responsibly and build your credit score.
You often talk about a peace of mind fund. What is that and how can I achieve it?
So before you take out any credit, it's really important to know that you have a backup plan. This means a small amount of money saved somewhere easily accessible and in a liquid format, so not a mutual fund, maybe in an FD or something like that, that you can always dip into if the worst case happens. If there's a scenario where you lose your job for a couple of months, you're out of work, or there's a really unexpected expense, maybe a big medical bill in your family, what shouldn't happen is that you start to default on your existing credit commitments. And that's why you need this fund, this sort of backup pool of capital, to give you that buffer and give you that protection so that you never get into financial distress.
Isn't that what your parents are for? I'm just kidding. But no, it's a great thought, but it's going to be so hard for
I know.
Anyone. What is Ostrich Syndrome? And why is it killing you?
Yes, I'm glad you asked that. This is a very common phenomenon, especially in young people that take out too many small loans. So yeah, an ostrich is very famous for keeping its head in the sand. When it's under threat or uncomfortable, it doesn't run, it sticks its head underground. weird evolutionary fluke. But it's a behavior that you might recognize yourself. Have you ever got into a situation where you don't want to deal with something, even a difficult work thing, and so you just keep ignoring the emails, and it builds up and up and up, and
You're
then it
hoping
gets
it'll go away.
Exactly.
Like, out of sight, out of mind.
Exactly. And I'm sorry to say that it never works like that with money, especially with debt. It's really important to take the bull by the horns, to address it, front on. The more you ignore it, the worse it will get. The interest will build up. The bank or the lender will also be less accommodating to you trying to figure out a plan. So it's really important to know that you can reach out to the lender and tell them when you're in distress and work together to find a way to solve that problem. If you ignore the problem and ignore their attempts to contact you, they're going to be much less willing to help you when you finally want to address the problem. So don't be an ostrich.
Suppose I'm a victim of being an ostrich and I put my head in the sand and it's happened.
Yeah.
Things have gone crazy for various reasons.
Yeah.
I'm up shit creek. What options do I have for restructuring? Can I get a second chance?
Brilliant. Absolutely. It's really important. Take control of the situation. Get on top of, your existing financial situation. Understand how much you owe and to whom. And then don't be scared to reach out. You will be surprised, but since COVID, lenders in this country have become much, much more open to what we call restructuring. This is when you work with your lender to change the terms of your loan to either extend the duration, so you could turn a 6-month loan into a 12-month loan with a smaller repayment amount, or even do things like take a loan holiday. If you've lost your job, it's totally understandable that you might need a 3-month break until you get back on your feet. Most lenders will entertain that discussion if you've been good so far. So I really want to emphasize that this is a dialogue you have with your financial partner, and the sooner you have that dialogue, the better. But don't assume that lenders are not willing to restructure or come up with a solution to help you out of a hardship.